In this business, my work is based on the trust that my customers give me, and I can't lose this trust. If they ask me to customize something to make it this way or that way, I definitely have to deliver and make it happen.
Well, trust is the foundation of our business. We're not talking about a few thousands of pesos given to us for safekeeping. We're talking about hardworking folks like yourself entrusting with us billions of pesos to manage for them in a good and responsible way.
The challenge is to keep this trust, even though there are so many things that are beyond my control.
Because we need to make our clients' money grow. Like you, we do our research. We look at many factors: the economy, politics, what's going on abroad. All of these things affect business. But we don't want our clients to be left behind. We want to bring you to the forefront of new ideas. We want to bring you to industries that you may have never even thought of investing before. We want to do this for you and bring you to worlds of investing that you may know nothing about.
What is important to you is important to us too. Your values are our values. Clients know that we mean what we say. They have now entrusted ATRAM, a multi-awarded asset management company, with their investments. Each day, we wake up with fresh ambitions, wanting to do what matters to us, for people who matter to us. We do what we have to do. We live for today and work for the future. We are ATRAM. Your future, our present.
Hello and good morning, everyone. Thank you for joining this week's episode of the ATRAM webinar series. I am Pat Muyko, Business Development Officer and your host for today. We will be having a very interesting discussion and key insights on market trends, opportunities, and outlook that will help shape your investment decisions individually or for your respective business organizations. If you have questions, you may send them as early as now by clicking on the Q&A button on your screen. But before anything else, I'd like to let you know that this session will be recorded and the copies will be disseminated within the day, as well as posted on all our social media platforms. Also, please don't forget to visit our website, www.atram.com.ph. for more detailed information about all the funds that we offer. If you have any friends who you think would like to attend this webinar but are unable to attend, feel free to share the YouTube replay of this session and visit our YouTube channel, ATRAM Studios. We would like to invite you to join ATRAM's new official Viber community group, #ATRAMPH Community, to stay updated on the latest announcements, advisories, and reminders. You may scan the QR code or visit the link on your screen and get a chance to win an ATRAM merchandise. We would also like this webinar to be as interactive as possible, so please don't hesitate to send your questions in the Q&A tab all throughout the webinar, as we have a special surprise for all of you. Each question you send is a raffle entry for a chance to win an ATRAM merchandise. Winners will be announced at the end of the webinar, so make sure to stay tuned until the very end. We will also be sending a quick feedback survey after the webinar, so we do hope that you can share your thoughts with us about our session today and how we can improve our webinar series. With those out of the way, let me briefly introduce our speaker this morning, ATRAM's Head of Macro and Sustainability Research, Mr. Jose Mari Lacson. Jose has over 20 years of research experience in equities, finance, and economics, spent with various global and local institutional securities brokerage firms. He enjoys sharing his experience and expertise in these fields as a university professor and as a PhD candidate in economics. So now, let us all welcome Mr. Jose Mari Lacson. Hi, Jose Mari.
So good morning, everyone, and welcome. And for this morning, just wanted to tackle our economic outlook and I guess the scenarios that we're kind of looking at for the economy. I guess the most relevant question for investors, and I guess everybody else, is really when will the recovery or economic recovery start? So our outlook is actually centered on this point, and it's hinged on three factors. Firstly, it's mobility, the progress of vaccination, and consumer and firm behavior. So based on our latest evaluation of these factors, we've actually downgraded our GDP forecast, which delays the recovery outlook that we had at the start of the year. Other macroeconomic indicators that we do monitor and forecast, we maintained our expectations for them with some minor adjustments. But given the certainty about how these factors, mobility, vaccination, and consumer behavior, we try to outline scenarios that help us look for at least help us with respect to our investment decisions. So, Pat, I guess we could start off with our survey. Like
Yes.
to put up all. So, mobility. So this is the first factor we're going to look at, and we want to get your inputs actually about this one.
Okay, so I guess we have a survey here. So for mobility, I think this is a very interesting question for our audience. Did you guys travel for vacation outside NCR during the first quarter of 2021? Yes or no, or maybe not applicable. Where did you go during this period if you were able to go out? Is it Calabarzon, rest of Luzon, or outside NCR and Calabarzon, Visayas, Mindanao, or not applicable? Maybe we can give them a few seconds to send their answers.
Sure.
This is a very interesting question to hear from our audience also, that if they've been outside the metro, right?
Yeah. Did you go outside, Pat?
Yes, I during the first, yes, I did actually. I was able to, during the first quarter, I was able to go out for just Batangas, outside NCR.
Yeah. Yeah, I was able to go through just inside the car. Couldn't really go out. I mean, you can see the long lines actually in some of the areas for, I guess, for parks, not tourism.
Yes, actually, that's how we go out. Like before the NCR plus bubble, we usually go out like just stay in the car and just do like drive through or take out. And stay in
Let's see what. Yeah, let's see what
see
the
they've
audience.
answered.
Okay, so there is some travel. About 28% did take a vacation outside Metro Manila, but bulk seems to be stayed at home. Interesting enough, you can see also, Pat, that Calabarzon was your place, Batangas,
Yes.
right? Was a favored or the preferred destination for those who did travel for vacation outside NCR. So I wanted to next time I will take you through some mobility analytics, some data that we got from Google. So this is just in this slide you can see digital mobility because it actually measures your footprint where you went using your phone. So Google as a part ng Android can actually track you. So what they've shown here, at least for the Philippines, so you have Philippines, NCR, and Calabarzon. So this is effectively your NCR plus, itong NCR and Calabarzon. It's monitored. And I put in here in this matrix the retail, parks, and transit. There are three other more areas, but I think this would represent your staple. You go out for staple, for discretionary, and in transit is really just that infrastructure we're seeing. So at the low, back in March and April, we were 80% down from the benchmark level. So you just have to look at it as in terms of the pre-lockdown. Mobility dropped by 80%. So by the time we reached the fourth quarter of 2020, and you can see the color here, just to explain the chart. This is the lockdown start, February, March. And then this is the second quarter, third quarter, fourth quarter, and the first quarter of this year. Okay, and what I put in here is the GDP growth during, or contraction rather, contraction during these particular quarters. Okay. So in the fourth quarter of 2020, we recovered this bit for the Philippines. We recovered to around 30 to 40% of mobility of the benchmark after coming off the ECQ in March, April. We went to MECQ in May. June, we were moving to GCQ. Then we went back a little bit to the MECQ in August for two weeks, and then then GCQ until March of this year, right? So that's how the policy, the restrictions happened. So the blue here, you see the year-to-date portion includes the return to ECQ and the bubble of NCR. I guess the point of this matrix of mobility charts is to show that for NCR, no, NCR mobility, if you look at this during that year to date, was relatively stable prior to the infection spike that we saw in March. So retail was stable. This was actually the impact of the drop towards the end of this shaded portion is really the bubble. But if you look at across retail, parks, and transit, NCR mobility was stable. It was uh, um, below the benchmark. Okay. The point, but what's interesting is on the Calabarzon area. And as you saw in our survey, a lot did prefer to go outside Metro Manila. Those who did go outside Metro Manila went to Calabarzon. And this mobility, the increase in mobility is reflected here. These are your Tagaytay, Cavite, Batangas, um, Laguna. And in fact, if you look at parks, they were actually above the benchmark, the pre-lockdown levels. Okay. And this is really the risk, I think, that we need to show that NCR was stable mobility, but outside NCR, Calabarzon, there was increase in mobility. And this is the risk when you relax mobility between NCR and the adjacent regions. We somehow bring home the virus and it spreads across the networks of NCR, no, under normal mobility. Okay. So the next slide shows the Philippines versus ASEAN, and the next two slides rather. But this is the first slide. It just shows Indonesia and Thailand. What these two slides will show you is that no country has really fully gone back to the mobility levels pre-lockdown, with the exception probably of Thailand. Now, this one is an outlier because in retail it's actually been able to go back up to pre-lockdown. But I understand that they're now facing a little spike in infection, so we may see this going down as well. No? But if you look at it, the staple and discretionary trips, meaning the retail and the parks, they're still down around 10 to 20% for Indonesia and Thailand. The next slide is versus Vietnam and Singapore. And here, they're getting close. I know everybody is touting Vietnam as an example, and they've been able to manage the epidemic very well. So also the same thing with Singapore, but they're still just close to getting back to the benchmark level pre-lockdown. It's slightly down, around 5 to 10% if you average across these three segments. No? So I guess the point is that even Vietnam's mobility, despite its success in the epidemic management, is still not 100% back on its feet in terms of mobility. So what does this mean? So the next slide summarizes that in the NCR, the mobility wasn't really the issue. What was more apparent was that the increase in interprovincial mobility it seems to be the bigger factor behind the spike. So what we can say here is that in terms of policy, we may see localized lockdowns, the way the cities have approached it, meaning barangay by barangay lockdown. But I think that if we want to prevent another spike, border restrictions may be necessary to do that. I mean, to mitigate that, or at least control it. And if the ASEAN mobility, if we look at it, it's about 10 to 20%. We're actually the least amongst our peers because we're about 30-40% down from before. So I think it also means that it's also the upside, no? So it means that if we can manage the epidemic, not necessarily solve it because nobody has really solved the epidemic at this point. If we can manage it the same way our neighbors are able to manage it, then we can bring our mobility back up to the 10 to 20%. I think that's where the upside really comes in, no? To achieve 5 to 20% of mobility pre-lockdown. So that's our view, how we're looking at mobility at this point. Our target to get to the recovery means we have to achieve this 15 to 20%. So the next factor is the vaccine situation. So we're going to take another poll on this.
So maybe let's see the poll. We want to get to know our audience this time around better, right, Jomer?
Yep.
Okay, so have you guys been vaccinated already? Yes or no? Do you have a first degree friend, not your parents, but if you know anyone outside the household that has been vaccinated already? Yes or no? Have your parents been vaccinated already? Yes, no, not applicable. So you guys have a few seconds to cast your votes.
Right. So here the question here really, Pat, is to you, because the way it's gonna work, the way the epidemic works is through networks, right? The same way it will be with the vaccine. It will be through networks, and the level of degrees affect your ability to protect yourself.
Right.
Okay, so we're counting on the first degrees going to the second degrees to the third degrees for the vaccination program to work. So here we're trying, the poll is just trying to assess the degrees by which we can estimate where vaccination is.
So maybe we can see the answer from our audience.
Okay, there are some, no, 13%, right, have been vaccinated, and you know somebody that knows somebody, you know somebody that has been vaccinated. Second degree is if you know somebody that knows somebody that got vaccinated, right? So have your parents been vaccinated? Yes. So the senior, the priority, I think that's an A3, priority A3, has met some progress. Okay. So I guess it has begun, and I'm going to go show you is actually how vaccination looks like across the region and what's the case, right? What's the best case?
Yes. Hopefully in a few months, this number for the yeses will be higher.
Mm-hmm. Yeah. Okay, so let's look at vaccination for the best case. No? So I want to show you the impact of vaccination on the best performing countries so far with inoculating its population. So the next slide should show you Israel. Okay, so this is a track this from a JP Morgan report, and this is sometime around February. And you can see that they were monitoring the European Union 5, Israel, and the US. And what you should be looking at is figure 3, where in the blue line is Israel. So it's the percentage of population that has received the first dose. They are way ahead of any other country. If you look at it in terms of the second dose, they're also way ahead of any country, right? And so they've made tremendous progress with respect to vaccinating or inoculating their country. They've been using, my understanding, they have been using Pfizer. The last two charts to your right is the impact, and this is the jagged line. Is really the daily infection rates post the 2 lines of the first and second doses. So the first dose alone has a big impact in reducing the daily infections. And in terms of severity, it also has a tremendous impact. Today, I think Israel has infection rate of like in low hundreds. Before they were similar to us, they were experiencing over 1,000 parang more than 7,000 if I'm not mistaken. But with this development, their program, it's been declining and it continues to decline. So the next slide shows the impact on mobility. Now we're going to go back a little bit to mobility. And even Israel, next slide. Yep. So this is again Philippines versus Israel naman, okay? But even Israel, if you look at it, they're not yet 100% also in terms of the benchmark. There is a bit on the park side, but in terms of retail and the transit, they're still below the benchmark. Single digit as well, pretty much like everybody in ASEAN. But the parks, they've been able to keep it, I guess, open. And it's actually improving. It's now recovering. I grabbed snippets of the situation in terms of vaccination. So you might say Israel's been successful because it's a developed nation. Not necessarily. They've done about 10 million doses, of which they've inoculated, fully vaccinated 55% of their population. Japan, which is a developed nation, has only provided almost close to 2 million doses, and their vaccination rate is 0.6%. So even the developed nations, such as Japan, is still struggling with their inoculation program. Same thing with South Korea, and both countries have been successful in managing. I think relatively successful in managing the progress of the infection. Their strategy has been more on the contact tracing, no? That approach, apart from rather than just social distancing. Okay, but having said that, the vaccination still is taking some time for them. The next slide shows you our vaccination. We're now 1.46, so we're just slightly below that of Japan and South Korea, but in terms of the population, we're 0.2. So we're also as everybody knows, we're behind. Our ASEAN is are the countries to the right of the Philippines. Singapore is doing. If you look at it, ASEAN is actually behind. Philippines, Thailand, Vietnam, Malaysia. We still are just above 1 million. Of the doses that have been given. Malaysia, Singapore is an outlier in a sense because they've vaccinated 9.4% of their population, but they generally have a smaller population, and the doses is about 1.67. So you're just slightly ahead of us in terms of the doses that have been given. So the ones that are progressing much faster are like Indonesia, India, and the United States. And what makes them better at vaccination? Now, the answer there is really manufacturing. Indonesia was apparently made the main distributor and manufacturer of Sinovac in ASEAN, according to this report. And India is a major manufacturer, I think, for COVAX. And United States, of course, is where most of the manufacturing comes in as well. So, if you're a manufacturer, you most likely will be able to provide the supply for your population. But they're still slow. No? Indonesia is still at 2.2%, even though they've administered 16 or close to 17 million doses already from the last take of of Google's data analytics. India, which is over 1 billion in their population, has done 124 million. US 200 million, that's about 26% of their population. China, my understanding, and the data isn't complete, but they've done over 200 million. And remember, they're also 1 billion in population. So that's kind of like the message here, that if you want to accelerate, we need to invest in manufacturing for the vaccine. The next slide is our situation with respect to the supply. This is based on the government projections of the supply schedule that they will get. The blue chart is the scheduled deliveries, and the yellow or orange line is really the inoculation rate that we've assumed given the minimum and maximum that the ITF has provided, and just average that out. Very simple. And what this kind of says, on the average, if we inoculate and assuming that we get the scheduled deliveries, there's a slight shortage in June and July. Parang something like 500,000 doses, if I'm not mistaken. But after that, if by August, supply should be equal to the demand. Okay, so what are the risks here? There's a U.S. ban on raw materials that are important to the production of the vaccine. So this actually is one of the factors that is that that contributes to the supply chain supply chain risk. Okay, and we are targeting 70 million by the end of the year. So again, it's dependent on the success of the portfolio of vaccines. We don't just have one vaccine; we have a portfolio of vaccines. So it's dependent on the it's dependent on whether we can secure from the different manufacturers as scheduled. By priority A and B should be inoculated by the second half of 2021. And which is actually the reason why for the third quarter, this August, is going to be crucial, because this is when the private sector, which had ordered its own, at least there's a consortium that ordered, is expected to receiving delivery around July, August, if I'm not mistaken. So we can begin the inoculation sometime in August. So that's kind of crucial to the schedule. Okay. But the supply chain is tight. So then we're going to do to our last survey. It's a bit long. I hope you take some time to go through it. The point here, Pat, you can show our poll questions. It's actually on the consumption part. No? There are two segments to the question, and the first one is a bit long, but if you can scroll down, it would be much appreciated. And it's the GCQ. I guess this tries to measure how you are confident about going out under a GCQ and GCQ.
Yeah.
So here, if you're saying that for restaurants, if you're allowed, GCQ allows you the restaurant to have 50% capacity, will you go out? And if you scroll downward, it's the same question, but under MGCQ, wherein we're allowed 75% capacity to be.
We want to know if they're more comfortable to go out.
Yeah. Actually, even if it does matter, no? I mean, if the amount of capacity that's allowed matters. And second, I guess it makes me wonder that if the signal matters also. If the government tells you that I'm going to relax already, data is showing this, or does it matter with your decisions?
Okay, so for the first three questions, just to summarize it, for the first three questions, that if we were in GCQ or like the 50% capacity allowed, would you dine in a restaurant, or would you travel for leisure outside NCR, or would you visit your favorite barbershop or salon again? And then from fourth to sixth questions, if we were in MGCQ where 75% of capacity is allowed, would you dine in, travel for leisure, or would you visit your barber or salon? Maybe we can have a few seconds for our audience to answer and cast their votes.
How about you, Pat? Will you dine in?
Personally, I'd still like even prior to this, I'd still prefer to eat inside my car. I
Okay.
go out to get some sunlight, to see other people, other places, to get more inspiration outside the home. But maybe I'd eat in my car. How about you, Jomar?
Well, it depends on the air conditioning. If it's al fresco, maybe I'll be tempted a bit. You know, um, we do lead some sustainability fund, right? And I think we don't want to create too much waste. Remember when we were ordering
That's right.
takeout, it actually creates waste. And offhand, I believe that you should try to minimize it. And by dining in, you might, because not, the packaging won't be there. But having said that, safety first. So always a balance, a trade-off.
Yes.
Okay, so
Maybe we
what's
can
our
see the answers of our audience. Okay, so for the first one, under GCQ, 65% said no. They won't be dining in. While 34% said yes. How about traveling outside NCR? 39% they would, while 58% said not yet. And would you go to your barbershop or salon? 47% said yes, and 52 said no. So I think that's almost like a 50-50. People would want to visit their favorite barbershop and salon. And
yeah,
how during MGCQ?
yeah. So I think this just says that yes, there's not much risk aversion. Actually, this is a positive sign. I think even if it's a 50-50, I think it's still a positive sign because even with the restrictions, kind of sends signals about um, the status or the state of the healthcare environment, that I think people are not as risk averse as we would we would
They would be.
be, yeah, as they so you would imagine, or maybe it's just us being too risk averse ourselves. But if I look at the data, it seems to say that we're not that risk averse. I think we can manage it. I mean, we do know naman our face mask, face shield, wash your hands, all that can be able to manage it. Um, and I think there's also a learning process as well. Knowing what has happened in the first quarter might make you, I guess, smarter in a sense to
Yes.
avoid the risk or manage the risk. The next poll
I
is
think we do
on
have one more poll on
yeah, yeah,
education.
yeah, education. So this one is more long term. No, we're trying to understand whether um, you what's the long term effect on schooling or education, because I think the some schools have said that no face to face classes, and even the DepEd I think has also indicated that. I mean, we were looking at the data from the budget, and we noticed that the infrastructure for spending for DepEd has gone down,
Mhm.
and what has gone up is really network. So I
Yep.
think even the government is trying to not spend too much on classrooms, but instead spending on technology or infrastructure for education. So I was wondering whether this has you hold the same view that it will be either homeschooling or use technology for
Or
education.
is they have upgraded, right? So did you or anybody in your immediate family do homeschooling? Secondly, do you plan to switch to homeschooling this coming year? Yes, no, not applicable. Did you plan to upgrade your broadband data plan in the next 12 months? Yes, no, not applicable. Let's give them a few seconds. Maybe we can see it now if they've answered already.
Okay, so we did see increase. Already there is homeschooling. There's a preference for homeschooling, and there is also a portion that would prefer homeschooling this year, because remember last year's the first time we had this situation, and the option of homeschooling probably never entered our minds until
Yeah.
it was there, right? And I think people reviewed what's the cost structure, you know um, Okay, so this actually is interesting and might suggest that we will see more, move to technology.
Yep.
For that. And the broadband is 50-50. This is interesting. So there's still some growth, I think, growth in demand for broadband.
Or
You
maybe
know,
they have already upgraded like last year.
mm. I think this data actually kind of also supports one of our strategies in Alpha Opportunity Fund, which has been in our that strategy has been on about growth, and one of our key uh, overweights there is actually on Converge, which has benefited from this type of demand. Um, okay, we can probably go to our forecast and we'll show you. These are interesting insights from the audience, and really appreciate it. Um, so we've downgraded our because of the mobility assumptions. We've downgraded our forecast to 5.4% for the start of the year. We were still looking at 9.3%, and that was based on the original assumption that we will be in MGCQ starting this quarter, and that we would be entering new normal rate by the third quarter. This had not yet factored in the spike in infection rates and the ECQ in late March. So now we said, okay, given the probability of all this and factoring in vaccination as well, our assumption that for the 5.4% is based on an MECQ to GCQ transition over the next 2 quarters, and hopefully an MGCQ situation by the fourth quarter of 2021, and new normal by 2022, which actually kind of coincides with our equity strategy and outlook as well. That may be discussed in greater detail in one of our webinars. But one of the considerations when we're building our scenarios is that these mobility restrictions, this positive ECQ, MGCQ, that their effectivity might be also changing. So we need to acknowledge that the spread of the virus may be due to other factors, not just mobility. It could be the transmissibility, maybe even the detection, the ability to detect the virus is changing. There may be other factors. So the utility of using the quarantines uh, needs to be reassessed, continuously, and as we apply them. And the second part is the vaccination. Vaccinations actually seems to be the heart of this strategy to address the epidemic. And basically, we will rely on vaccination to the schedule. The schedule that if we can maintain that schedule, that augurs well for the results of bringing down the epidemic or the infection rate. Um, Lastly, our forecast, which is this 5.4%, still assumes that the build program is in play, and the multiplier effect is still there, and the elections, which will come in May of next year, will start generating some demand going into next year. I think there's a question actually somewhere from the audience, but we'll tackle that a little later. Okay, next slide is where the downgrades came from. It's really coming from consumption. So we're now looking at 2.7% growth in consumption, and this is really coming from the second and third quarter. If you look at this chart, the white blue line or the lighter blue line is our original forecast, and we were looking at 18% growth in the second quarter, partly due to a base effect. But now we're looking at 11% because of these mobility restrictions that were not expected at the start of the year. We've maintained our other assumptions on OFW remittances. I think when you look at it from an external perspective, the case is still strong for recovery, but because of these mobility restrictions, even if you're getting the money, income is there. If you're not able to spend it, it still is driving that slide in the recovery expectation. Okay, and just as a caveat, everything is interconnected or interrelated. So while we maintain these assumptions on other areas, it's possible the timing of changes in policies might affect, even capital formation or private sector investment in the government spending. So next slide. Okay, it just shows you why we think that there's still a lot of, but there's still reason to expect recovery to be there in 2021. If you look at remittances, it's still strong. No? We were up about 5.3% year on year in February. So this is still within our expectations of about 3 to 5% growth in remittances in 2021. So last year, everybody was already concerned about remittances because of unemployment out there. But even despite this dip that you can see in the yellow line of the chart on the upper left, it rebounded. And I think it was really more because there was no mobility, that nobody could really secure their remittances or even send the remittances. So we're now back to this level. And I think even the stimulus in the US, those cash checks that they're providing ends up effectively in as remittances. Balance of trade, as you can see, it recovered well. We're still in the balance of trade deficit, this upper right chart. But what it says is the deficit is there. Is that there's actually some demand. No, the deficit. So there's some demand. Domestic demand is recovering as well. So outside the Philippines, I think there is some positive developments. So next slide. There are some issues with respect to our economic prices, and we're expecting a 4.4 average inflation rate for 2021. But this is really a supply chain shock, no, that can be as the way they're managing it right now is a temporary mitigation through importation or temporary importation for pork. Even with the oil prices, you can see here that oil prices have moved significantly higher from the end of last year. And we believe this is also a supply chain driven. And despite the increase already being factored into our inflation forecast, it's really a risk that we need to monitor. But having said that, what really matters, I think, at the end of the day is the demand driven inflation, which is low because the growth isn't there. We don't have growth at the moment. And the growth is dependent on mobility. So we're still going to go back to that. We think that the central bank will continue to support the recovery spending of the national government with low interest rates. Now, next slide is actually an article that caught my eye from Bloomberg. And looking beyond 2021, we need to start considering the factors that might shape the economy over the next 24 months post 2021 this year. The next slide. This is where an article on Amsterdam, coming off the bubonic plague. They lost 10% of their population, but they were able to rebound quickly. The same thing was true with the Spanish flu, if I'm not mistaken. There was also growth. I guess the difference between the Spanish flu, talking about the US there, with the Spanish flu, there are two ways here. You have to look at it from public spending. In the US, they had the Public Highways Act, so they were building these long highways, and there was also some technology, the development of the assembly line for the cars. So you use that. So that brought the jobs, that brought the income, and helped them grow as the epidemic subsided. In Amsterdam, it's the private sector, and I think they made changes in terms of the financing for land, and they involved the private sector. So it's kind of necessary for us to get for the recovery to be there. The private sector has to be also involved. And the policies that over the past couple of weeks are also designed, private sector, but FDI, foreign direct investments are there. So I think that's what we should expect. Policies over the next few months will probably be aimed at enabling FDI flow to accelerate. So these are just examples of what has happened over the past few months, past couple of months, the amendments to the Foreign Investments Act, which basically unified the investment or the incentives under a single organization. I think it's still a bill. Okay, it's not a law yet. So, but this has been certified as urgent by the government. Also, retail trade liberalization and the Public Service Act, which I think will allow telecommunications to be, foreign owned above the 40%. Those are like the expectations. Mining, of course, there's a moratorium and it has been lifted with EO 130, and create. Now, create lowers the tax rate. The IRR, I think, is still yet to be released. But the point here is that if you lower the tax rate, the private sector has to reinvest that. It also is meant to make it more competitive. Now, just give you an idea where the FDI flow has been going over the past few years. It's been to Vietnam. What's the corporate tax rate in Vietnam? It's 20%. And here we're charging about what, 30? Right? So in terms of taxation, we're not really that competitive to our peers. So to attract that, we need to create should address a portion of that competitiveness. Okay, I think this the last point is really that we've downgraded our expectations on the policy risk, given these new adverse epidemic-related developments. What we want to say is the third quarter is going to be very crucial in augmenting behavior and sentiment of the market. If we are able to keep ourselves on schedule and manage the epidemic, I think that's a good point. No? And we need to see private sector spending investment there to be present to help augment the multiplier effect of the stimulus. And lastly, all of this is actually in our global moderate strategy. I mean, for those who follow our multi-asset strategies, we do believe in the long-term recovery and growth of the Philippine economy, and that's built into but there's also some cases for cyclical growth. There are other things that are happening in the U.S. economy that are positive, and we've aligned our strategy on those and the thematics that are present. You might want to explore those as well with respect to our views on the local and global economy. Pat, I end the presentation or conclude the presentation with these points. If we can entertain some questions.
Yes, we do have a lot of questions coming from our audience, Jomar. Okay, maybe we can start with this question first. What is your outlook on the credit rating of the Philippines, and how likely is the risk of a downgrade?
Okay, that's a good question. That's actually one of the constraints that the government has. I mean, there are 3 bills pending in the Senate for Bayanihan 3. So people are still asking for stimulus, and people have been comparing us to the US, a lot of stimulus. But I think the government, given our experiences with the IMF in the 80s and 90s, has been very prudent. And back then, our debt to GDP during the time in our below investment grade status was over 70%. And I think the Department of Finance has set a cap of 60%. So I think at 60, they're trying to manage that. I mean, but at the end of the day, that debt to GDP is important on the GDP. So we need to get that GDP growth moving up and brings it down. And if we are able to bring it down, then we can finance more stimulus or stimuli going forward. But we need to address GDP growth first and stop the contraction. And how do we do that? Mobility.
Yeah, in line with growth, how long do you think will it take for the Philippine economy to recover?
Well, our recovery, you have to define the recovery. Or the way we define it for our forecast is a return to 2019 GDP levels. In terms of equities, I think it's also the same thing. Recovery in earnings is a return to 2019 levels. So how long? I think we're looking at 2022, wherein we will get to the 2019 levels. Again, on the assumption that mobility, we're able to bring back our mobility to the ASEAN average, right? I mean, 5 to 10%, maybe 20%. I think that's the upside that we need to look at. Yep.
So, in terms of mobility, what mobility assumptions does the market valuations today price in? Is there an upside? Is there a downside?
Uh,
And do corporate earnings still support the current valuation of local equities?
I think the when I look at the current valuations, it seems to be factoring our current mobility of about below 40%, the lockdown. So I think the upside really is if it starts working, the vaccination program starts working, and we are able to manage the epidemic. Remember, at the end of the day, the vaccination is the heart, and it will. I think what the government is saying is it will, if you do it right and keep it on schedule, the infection rate, like Israel, will move downward without doing anything on restrictions. Okay, so if that happens, then we go to, let's say, a mobility of 20%. I don't think that's priced in yet. What we may see is that it's being priced for 2022, which I think we have a over 887 a target yata for the PCI on 2022 earnings. So it's something like that. If you can get to the 20% na mobility down from the benchmark, that's not yet priced in.
Okay, in terms of mobility stats that you mentioned earlier, does it include movement of deliveries like Lazada, Shopee, Grab, or Lala Move, as this generally replace consumers going out? Does it included in the stats?
I'm not sure on that question because I think the what it just measures really is your phone. So it is possible it's already included, but that's not in the manual of Google of what they track. I think it's really an aggregated. At the end of the day, when you aggregate everything, it kind of dilutes in everything. So it should still be representative. So even if it does capture Lazada, I think it's it's already in the numbers.
Okay.
Yeah, the law of large numbers.
When do you see unemployment rate settling back to pre-COVID level?
Um, that's we don't forecast unemployment rate. But what we can tell you is how we look at it. Unemployment, the long-term median for unemployment is around 5%. If I'm not mistaken, at the best, we were below 3% unemployment rate prior to the lockdowns, this crisis. Um, so right now we're 8.7% as of February. The fantastic thing that the PSA has done is to, I think, do it monthly already. Before we used to do quarterly unemployment surveys. I think we're now able to do it on a monthly basis, so we can actually see the impact going forward. Now, having said that, it's 8.7%. It's very tough because I think the survey on schools, no, the education is kind of important because we've noticed that a good portion of the unemployment, although some jobs have recovered. Remember, the peak last year was 17% unemployment rate. We've now gone back to 8.7. So some jobs have gone back. But what has sort of remained persistent is the youth unemployment. Because if you're not in school, you're looking for work. So that contributes to the unemployment rate. So if your education is not yet there, you're not getting people to be in school, then the labor force participation rate is going to be includes that youth sector.
Okay, can we backtrack a bit on mobility? It seems like most of our audience are interested in the mobility data. So mobility data in the Philippines is lower relative to the pre-pandemic baselines, more so than our ASEAN peers. Yet our COVID cases are high, while theirs are under control. What's the reason for this disparity? Why hasn't hindering our mobility control the virus like it has with our neighbors?
I can only hazard a guess. Okay, so I mean, and I think there has to be some science. In fact, that's a very good question that I think somebody, you know, you know, with a science degree would try to address because you have to understand how the virus really works. But my thinking is that if I were to look at it in terms of um, the contact tracing, I think everybody's acknowledged contact tracing is our weakest pillar. And I think we ran out of budget for that. I think I saw an interview before where we ran out of budget from Bayanihan 2 for contact tracing, and therefore we haven't put enough money into contact tracing. So I don't think we've actually allocated more this year. So last year we had money for contact tracing. This year it's still based on LGU budget. So if you want, unlike in other countries, that is a strong factor. So maybe if you want to manage that, we can approach it through using their approach. But having said that, one of the things that I was looking at when you look across all these countries is that their system of government or their structure is very centralized. No? I mean, when the national government puts out a decision, it automatically is cascaded across the government structure from national to LGU. Our structure is decentralized. You know, I mean, our local government code empowers a lot of our LGUs. So in a sense, we've been running on that. Contact tracing, although it's DILG, the money comes from DILG. The implementation at the end of the day is at the local government. So again, so that's why I think if you go through the interviews of Mr. Magalong, you'll see how coordination is important for contact tracing, that you need to be able to do cross-border tracing, meaning if you are in Isabela and there's a contact that takes you to Metro Manila, how do you do that? So I think that's one factor. It's not the factor, but as we go back to our presentation, it seems the vaccination is the heart of the strategy right now. Okay, and just following where our capex, our budget has been allocated, and so if we'll follow Israel basically to bring it down using vaccination.
So in terms of vaccination and the pandemic, how do you think the current pandemic situation in our country, coupled with upcoming national elections next year, will affect the economy in the next 24 to 36 months? And will we see the elections spending be able to boost the economy despite the negative sentiments caused by the pandemic?
Okay, let me just go through the questions. So how do you think the current? Okay. Well, I think we need to address the my thing is that we need to start addressing the national elections by the second half, because I think even in I'm not sure if it's Thailand, but there's another country that also has elections, and they had to initiate new legislation just to address that, because they're still having issues with the epidemic. So how do you implement the national elections if we're in ECQ, let's say, for example? So I think those are kind of like the issues that need to be addressed in the second half. We'll see election spending be able to boost the economy. I think that it will. And we looked at the past, but it depends on. I think what has happened is that there might be less money. So if you look at all presidential elections over time, they've been very. There's a positive boost to the economy for presidential elections relative to senatorial. Okay. But there's less money now, right? I mean, everybody's wallets are going to be tight. I mean, we're now focusing on vaccination. That's where the budget has been allocated, or the funding that we've secured. So it will, but maybe not as much as before, but it should. How it will be, we'll find out. I guess once we ask the question, how will we conduct the elections next year?
So we have a question from a new investor. The Philippines' recovery has rather been slow compared to other countries, which you mentioned earlier. Do you think it's safe to invest at our local funds during this time?
I think at the end of the day, it's an issue of what's your downside, right? I mean, if I were to just look at it from the economics perspective, what's the downside of us going to 60% or 80% mobility at this point? I mean, the survey has said that you will still go out, right? I mean, you will still eat under GCQ. So what's the probability of us going to ECQ again? So those are sort of like the factors that you need to consider. But it seems that the probability of us going to ECQ for a long period of time, say two for entire quarter, seems to be low at this point. So therefore, the mobility assumptions, the downside to going back to 60-80% is I think low at this point. And the upside really is to get to the uh, 0 to 20 where our peers are.
How should our investors react for the third quarter since it is quite crucial?
I think you pretty much like last year, no? We were looking at the data. The quality of the data last year was really good because remember it's a shock. I think everybody's trying to organize where's the data. The apps were still being developed at that time. But in May, I remember it that we were looking at the data already, and we were anticipating trying to understand the virus as pretty much like everybody else. So if the question is the third quarter, we should be monitoring ahead of that. The third quarter, we should be looking at the vaccine arrivals at that time. Uh, if we see that the vaccines are arriving, or we're securing the deals, no, my commitments that are there, I think this is really a positive signal because you've seen Israel, diba? If their success translates to a decline in the infection rate without lockdowns
Yeah.
or additional lockdowns. They had social distancing. It's probably going to be with us till some form of it all the way up to next year. Uh, but it really depends on our success on the vaccination.
Drummer, with all the data that you presented earlier on mobility, on vaccine, on education, how does it affect our investors' investments at present as well as in the future? I think this is a question for in terms of his local investments.
Okay, how does it affect? That's what's driving our forecast for earnings, right? I think we've taken a more conservative view of earnings recovery in 2021. We're also pushing that up to 2022. You may have, as an investor, I mean, given the uncertainties we have today, it's you may need to take you need to take a bit of a longer term. It can be like a 12-month horizon at this point, given the uncertainties and the recovery. We believe the recovery is there. It's a matter of getting your strategy to work for you. I'm talking about mobility strategy and the vaccination strategy, right? If the data for the third quarter, going into the third quarter, suggests that we're intact, then this actually validates a stronger scenario that the recovery will be in 2022, and the faster that recovery goes much nearer to you. Parang the time scale now becomes shorter. Okay, so that's how I would look at the data at this point. But our scenario or base case is that the full recovery is in 2022.
So, what kind of metrics do you expect to see before foreign investors start getting back into the Philippine market?
Mm, what indicators, Pat?
Yes. Let's say
Um,
indicators that we look to see.
I think that the first company to step into the country, no, it will be um, FDI inflows, the equity kind, no, because the central bank, when you say FDI for the central bank, they actually I think monitor two. There's a debt kind of FDI, meaning I think this represents multinational companies here being securing credit from either their parent companies sending money here or from multinational financing. That's FDI from a BSP perspective. But the other one that we kind of want to see is the equity, I think, meaning an actual factory um, being built, and that will also be reflected in the balance of payments. No, just a different classification. So we want to see that increase in FDI flow. Um, but ahead of that, I think it's going to be more like an actual statement. Maybe as a validation, you'll probably look at occupancy rates for or vacancy rates for property here in the Philippines. No, as firms secure their offices, new firms secure offices or expand their offices, we'll see that vacancy rate, which has suffered, start improving. It's also a good indicator.
Okay. We want to accommodate as many questions as we can from our audience. Can you give us your interpretation in terms of growth for the fiscal year? Your interpretation for this year for the global technology and consumer discretionary, considering the very high yield in 2020.
I
Do you think
haven't
the past year
yeah,
has done
yeah,
well?
yeah. I know. I think that our multi-asset funds have benefited from the strong growth in technology, and I think that's our own view. Is that it's pretty much a lot of it has been priced in. I think we've already reduced our own exposure to technology just to take some profit off the table. We still do believe in the tech side, but I think but we're now looking as a strategy, and our multi-asset guys can take that up during explain their rationale much stronger in a future webinar. Uh, that we believe that the cycle we need to rotate to cyclical place. That's why we're looking more towards value based strategies at this point for our multi-asset. What this means really is that Biden's administration is securing a fairly hefty sum of for their stimulus package, and they're putting it into a good portion of that into network development, if I'm not mistaken, for technology, and that's going to drive that demand. Hopefully, it actually that flow will come to us in one form or another through FDI. But just looking at it from a global perspective, what it also means, it should benefit other companies that have not yet priced in this stimulus that the Biden administration has put in, and I think that's the way we are um, uh, how's designed our current multi-asset global moderate strategy.
Okay, I think we can accommodate one last question for our audience. We'll try to answer them any way we can. So, do you think this year is still the best time to invest? And what fund do you recommend having higher possibility to perform well?
I think that um, well, I think that's which fund would perform well. I think so far our funds have performed well, uh, ready for our multi-asset strategies. I think that it's really a matter of how you will have to build your scenarios going into 2021. Locally, there's a lot of uncertainty on interest rates. There's a lot of volatility that's happening uh, post inflation, but at the end of the day, that volatility will subside, and what you just need to do is build your scenarios uh, and design your horizons on based on that. Um, so I think it's just that you need to identify identify the factors that are critical for your strategy. In this case, what we've identified as critical or mission critical is mobility, and those are scenarios for that.
Okay, I guess we can wrap it up there. Once again, thank you, Jomar, for that comprehensive market outlook and sharing to our audience your insights for the upcoming months. And I am sure that you are interested to learn about how to invest in ATRAM funds. Please tune in to know more.
Hello. To open an account with ATRAM, just visit our website at www.atram.com.ph. Here, you can learn more about all the funds and services that we offer. Our site will then guide you to our online investment platform, Seedbox, where you can start investing for just 1,000 pesos. But if you have more questions, visit the website's Frequently Asked Questions page or ATRAM Academy page. Thank you.
So in case you have not registered yet for our next webinar, El Hamil is set to discuss the best performing peso-denominated equity fund in the market today, the ATRAM Alpha Opportunity Fund, You may do so by scanning the QR code, by scanning the QR code flashed on screen. You may also type in the link on the left side of your screen. Okay, again, if you have any friends who you think would like this webinar but are unable to attend, feel free to send a YouTube replay of this session. Visit our YouTube channel, ATRAM Studios. We would also like to invite you to join ATRAM's new official Viber community group, #ATRAMPH Community, on the latest announcements, advisories, and reminders. Scan the QR code or visit the link on your screen and get a chance to win an ATRAM merchandise. And lastly, please answer the survey at the end of this webinar. We would love to know your thoughts on today's topic. And on behalf of everyone at ATRAM, thank you again for your attendance and participation. We wish you and your loved ones continued good health and safety. Have a great day.